Now, the whole point of this video is to provide you a continuation to the blueprint video that I released last year. Hello YouTube, and we're back. It's been such a long time. I am so sorry for how long it's been, but we are back, and hopefully back for good. The main reason for not being able to post on YouTube is life got in the way. I started becoming more and more unwell, to the point where I needed to decide where I put my energy the most, and it just had to be within the Discord. That's the only reason. But a lot has changed in the past year. I think the biggest change is now that we have Vertex funding. The link to that website will be in the description below. So we are a true funding prop firm, not like any other simulated prop firms. I don't like to talk smack about any other prop firm. However, we are true funding, so anything you do will be placed on a live trading account, so be sure to check that out. I think the biggest thing as well to mention is if you've been following us on Instagram, you would see that we've recreated our daily pip cycle model to the point where it's one time frame, one pair, same session, and it's to the point where it's almost impossible to get anything different from myself and James. And the reason we've done that is because at the end of 2022, I sat and spoke to James and realized that, I'm not afraid to admit that most of our community weren't really profitable because of their models being so difficult to follow. This, regardless of how rule-based they are, there was still some elements of discretion. Well, not discretion as such. It was more elements of experience that is required to understand what you're doing. However, we've been teaching since 2019 as Vertex, and even before that, we've understood what works and what doesn't. So we've created a system that removes everything that was struggling. Well, we removed everything that traders were struggling with, to the point where we created a system that everyone can take the exact same trade. Now, for that, I'm not going to go into too much detail because I have created a webinar which will be in the link below. So be sure to check that out. If you're watching this video, you're someone who, for one, wants to improve your trading for the better, or is looking to refine your entries, or first of all just trying to learn how to trade, that video is perfect for you, and it will give you it'll give you an insight as to what mechanical trading is, what true mechanical trading is, not just because in a long time we have seen rule-based trading pop around everywhere. However, no one really knows what true mechanical trading is, and I'm here. That's the reason why I'm back on YouTube, because I want to push to show what true mechanical trading is. So be sure to watch that webinar in that link below. But without further ado, let's carry on with today's. Now, the whole point of this video is to provide you a continuation to the blueprint video that I released last year. Now, I'm going to show you 3 things that you can add to improve your probability using that exact same model. So just to highlight, just a quick run through in terms of the blueprint video, it's so simple in the case of just waiting for that mitigation play, and then you enter straight off there, right? Once you have that break, that's a very bad drawing. Hold on. Once you have that break of structure, and then you're looking to enter off there, right? It's as simple as that, and it was a case of waiting for that right session to do that. However, what you're going to add now is you're going to utilize what the high time frame is showing you, and you're going to utilize liquidity in this case. And the third thing is utilizing the timing. So now I'm going to show you an example. Now this is, I would say, a cherry-picked example. I'm not going to hide that. The reason why I'm showing you this one is because it's probably the most ideal example to show you, which is a great example of what I'm trying to teach. And then it'll be up to you. Well, it'll be down to you, even not up to you. It'll be down to you to go ahead and test this model. Now, the key thing about this, the more cautious you become, the less frequent your trades are. But you have to understand that trading every single day is not what brings profitability and consistency. Having a set model that you follow and being strict to it is what builds your consistency. My consistency isn't built about me, isn't from the amount of trades I've taken. It is purely from me sticking to the exact same system every single time, regardless of whatever system I'm focusing on. If I just stick to that one system, that's all I need to do to find consistency. That's the main thing for me. Now, all you need to do is, to start off with, is identify what the higher time frame is showing you. So this is what I will class as, say, rule 1. So we're going to focus on this piece of price action right here. So let's go back to, and the reason why I'm saying it is a cherry picked example is because we already know what's happened. And I think I often see like hindsight trades everywhere. However, no one really actually goes into it, into detail how you actually get it. And then when you go back and go and try and trade it, it's not the same, right? You're not getting the exact same entries. However, what I'm going to show you is how you can capture these moves by following the exact same system every single time. All you need to do is follow and stick to that system. So some days your entries won't present, which is fine. You have to be able to sit on your hands and wait for the right opportunity. So the first thing we're going to work on is understanding this range here. So our range that we're focusing on is here. Okay, so this is our bearish 4-hour leg. Now what I'm going to do is use a Fibonacci tool and draw this. Now the main reason, let me just lock it because I accidentally move it every time I draw. So now we have our Fibonacci tool. Now the idea is we want to sell above the 50%, which is a pretty standard rule in the SMC world, I suppose. It's not crucial for us, but it's to understand where we can increase our probability. So if you're selling, you want to sell in this above the 50% mark, basically. Now we need to identify our POIs. Now the POIs, I think sometimes we become too strict with it to the point where, and I'm a victim of, I'm not a victim, but I did it myself, where I used to refine all the way down to like the 30 seconds or 5 seconds, whatever, right? Then I realized there's no point. I'm missing so many trades. I'm missing so many opportunities. Why am I doing that? Now, the idea behind this is that we want to, we don't need to have that refined POI. All we need to have is a POI and then trade off the reaction. We are going in the direction, right? So all we're trying to identify is the direction of the moves that we're looking for during our sessions. So from here, we're going to capture the sell move that created this, capture the buy move that created the sell move, which is here. Okay, and we are going to be trading this reaction. So the idea is, obviously price is tapped in here. We are going to be looking for sells only until we reach this new low. You can do buys if you want, however that is counter trend and that does lower the probability. What I'm trying to show you in this video, I will show you counter trends in another video, but which would be a good idea for another video even. But what I'm trying to show you here is how you can maximize your trading with less exposure. So that's the whole idea of trading with high probability. Then is the case of trading your session. So let's go, I don't mean to do that. Let's go to here and we're going to go to the M1, and the M1 is going to be our entry time frame. Now, in terms of what you can see, these blocks here, so this is our London range, which is from 8 to 10, and then we have our New York range, which is, it should be 3:30, which I'll adjust. Oh no, that's because it's on here. It's 1:30 to 3:30. Now those are the time frames, not time frames, but those are the time periods that I prefer to use. You can adjust as you see fit. Bear in mind this is based on UK time as well. But feel free to adjust it. Now, the only thing we're waiting for is, so price is already tapped in. Now price is tapped in outside our range. Now, how do we use the blueprint model and utilize liquidity? Now it's very simple. Now keep it as simple as possible, as you know that I always do anyway. Now the whole idea of the blueprint video is that we wait for the mitigation and then we enter off the next one to follow that order flow, right? Because the idea of mitigation and order flow, well, mitigation is what creates order flow. That's the idea. Now the idea of incorporating liquidity is we will wait for some sort of bearish move and then we'll wait for a bearish failure, because the idea is liquidity is sitting above every single high, every single low. We're waiting for some sort of bearish structure to be taken out, and then we're going to wait for the next bearish structure, then mitigation, and then we're going to continue and then trade off there. So this is the blueprint video, and the only thing we're adding is this failed structure. Now my drawing is terrible, I completely understand. However, I'll show you an example. I'll show you an example. Okay, let's go to here. Okay, so price taps into here. We don't have to do anything until we reach our session. So let's start off. Let me go back to Let's just go to here to keep it simple. Okay, so what we have is our bearish play. So we got a bearish move from here to here, then another bearish leg from here to here. But what happens here is this is the first time that the bearish structure is failed, so it doesn't continue to create new lows. What does that mean? Liquidity is being taken. So now when that happens, this is when we start looking for our blueprint model. So the blueprint model is just waiting for some sort of mitigation. So obviously we have new highs being created, which this high being created here. Okay, and then we go to create this low. Then what happens here? We have mitigation. Okay, so that's our rule number one. And now we're looking to enter off that. So the idea is now we need to wait for another break of structure. So what we have, let me get rid of this so you can see it. So we have this high, we have this low, purely because if you can see here, we've got a candle break below. So we have a low here. So we have this break of structure, and then we form this low. Now, once that is formed, it's simple as I mentioned in the last video, is we are going to place our order on the OB itself, which is this black candle. So you can place it at here with our stop loss above. Now let's put it at 0.5 pips above, 4.7. Now your first target point would be the session low, which is going to be here, which is where you're going to take your first partial, should you wish. However, the overall target is to go all the way down to our 4-hour low. Why? Because that's what we're expecting to happen. Based on the higher time frame. Now, if you see this enough, you'll have the confidence to understand that you can hold a trade for that long. It's just a case of building your confidence to do that. Not everyone can do that. You can aim for a lower RR, whatever you wish, you know. But the idea is the entry system remains exactly the same. So the idea here, in terms of refining this even further, so we have our OB here, right? So let me get rid of my drawing. Let's get rid of this. And let me draw a box around the OB. There you go. You can set this to the 50% should you wish, and obviously, which here it taps. The question is, would it actually tap on your broker, which increases the risk to reward to 37R compared to 19R. However, for me, oh, it taps actually here, not there. I'd rather not be too perfect. You're better off getting in the trade with high probability, because this is already high probability. Think about it this way. You're following high time frame direction, right? You are following this bearish structure being taken out. So that is liquidity being taken and grabbed. And then you are following bearish order flow being created by this form of mitigation. So you have your stop loss being protected. Now, if you want to be extra cautious, your stop loss is protected above this high, above the mitigation high. So this is the one that was taken out. Now you can put it above there, and then you're protected even more. However, the idea, you know, if you want to be aggressive, then put it above, just above this one, the one that you're entering off. Simple as that. But in terms of probability, you have enough probability there to just follow the trade and continue on. And that is it. So in terms of the blueprint video, what I showed you was entering during the session and wait for some sort of mitigation, break the structure, then you enter off there. Sorry, not off there, off here, right? You can just do that. However, this is giving you the idea of direction beforehand, so you already have that pre-planned before you come into the session, so you don't have to. It's taken away the whole when you come into the session, right? You're trying to find what direction you're going in, what's pro trend, what's counter trend. That's already worked out for you because you already understood what the 4 hour is showing you. You already know that you only want to sell above that 50% mark. That's it, simple as that. Because if that was below, if this happened below the 50% line here, you wouldn't take the trade. Okay, that's invalid for you. So it's already eliminated that. So you have that probability. Then it's the case of having liquidity being taken, which again increases your liquidity, not increases liquidity, increases your probability even more. And then it's just waiting for that mitigation play. Simple as that. So all you have to do now is just go away and test and test and test and test. Now I did GU purely because I don't normally trade GU or look at GU. So this price action was something I just found this morning. So that's why I built this video around it. As I said, I did cherry pick this, but this is what you should be looking at is what a winning example looks like, and this is the only thing you are looking for. So imagine in this case, you are looking for first that 4-hour range, waiting for that tap, and this is the only thing you are looking for. This is as rule based as you can get in terms of utilizing SMC. And as long as you can understand that this is what you're looking for, and as long as you can stick to those rules, you will be consistent and profitable. And the reason why I'm saying you'll be consistent is because if you can stick to the same foundation, which is a consistent foundation, you will be consistent overall. What tends to happen is, say for example, you trade today, and then price ends up, I'm pretty sure it ends up going all the way below at some point. It goes below 50%. So now it's below 50%, right? And when price is moving around here, you can't do anything because your idea is to trade pro trend. You're not going to trade any counter. You're not going to start buying from here because there's no point. You are waiting for price to take out that low, and then you're going to continue looking for the next move, right? Simple as that. If you miss this move, you miss it. You just have to leave it. Not everyone can be as disciplined, and this is what happens to traders who start losing. So your objective is trying to be disciplined as possible while sticking to this exact same model. I hope you found this video useful. It's a pleasure coming back onto YouTube. I know I feel a bit rusty doing these YouTube videos, and I hope my editing is okay. But as I said, if you want to understand more about what we do at Vertex, obviously feel free to visit the website below, and also be sure to check out the webinar, which is probably the most important part, because then you can understand what we actually do at Vertex and what we've created over this last year, especially with the amount of consistent traders we've created in 1 year alone compared to since 2019. So that's something to check out. But anyway, I'll catch you on the next video. I hope you've enjoyed.